Terrific. Let's get started. We just want to welcome everyone today. This is Interactive Brokers. This is the third part of our Spring Hedge Fund webinar series. We're so excited to have you all today. I'd like to take a moment to welcome Henry Zelikovsky. He's the CTO and Director of Engineering Services at Starpoint Solutions. As Starpoint's Chief Technology Officer, I just want to mention that he provides both technical direction in both the planning and creating solutions for institutional hedge fund clients, proprietary trading groups, and money managers around the United States. He has an extensive background in software solutions and development, primarily for the financial services and telecommunication industry. I just want to mention that Henry comes from a long career at Merrill Lynch, Bank of New York, and AT&T. He designed and developed real-time financial data systems, mission-critical trading floor applications, and internal analytical systems. He's going to be speaking on a topic that we know has gained much interest as of late, as hedge fund managers look to provide excellent performance accounting tools, but also to keep costs low. The topic is hedge fund portfolio accounting and fund performance tracking services, the search for the best model portfolio. Henry, please take it away.
Thank you, Amanda, and I'd like to thank Interactive Brokers for allowing us to speak today and setting up this presentation. Starpoint is a technology company, and we, a few years ago, tried to repurpose many of our individual designs and real-time systems and analytics to determine what benefit we might provide to analytics community, hopefully in a low-cost manner that we've been able to achieve over the last few years. And our target area is some of the gaps that we see in technology offerings, especially from the convenience or flexibility in tracking, the tracking tools that might relate to you as a manager, determining what assets you might choose or what assets might be performing in the criteria that you like or don't like. And it's really flexibility that we were going after and ability to put together a tracking model that would allow us to answer many of the questions people ask today, and hopefully you can set up your own tracking criteria and answer your own questions as you watch your assets perform time over time. Our focus, by and large, is that we try to keep your assets in the what we call asset atomic view. Atomic view for us means a multi-legged position in sort of hierarchical tree, if you will. Any leg of a given position of a given asset is really tracked separately, and any calculations or analytics that stem from that particular leg of that position into any aggregate, into any time dimension that the aggregate participates in, is tracked individually, and we're able to adjust every leg of every position as any conditions that affect it change. Essentially, establishing asset tracking points of interest is something of a more proprietary nature to your investment process that you as a manager would set up. The dimensions, the periodicity of evaluation, the aggregates that we consider to be custom aggregates, and therefore we will focus in for a number of years on strategy-based or custom-based attribution that stems from you creating your private aggregates. Traditional aggregates might be your position participates in a certain asset class in the industry, but you can also correlate and you can also create your own aggregates. It does not need to be any standard, but it's really for you to determine in what dimension, what perspective you look at your assets performing. Tolerance, we create a threshold or a percent of deviation, or maybe ultimate a value of deviation that you assign to your performance fluctuations. It's useful not to react that suddenly when the certain fluctuations in your position occur. You want to give it some duration before you consider that to be out of tolerance. And you can set up those thresholds on your own, but we're focusing again on flexibility. Any dimension for tracking that you might create, we put it into an asset tracking schema, which is the way we actually methodically and automatically follow, in the technology sense, how your assets perform. We obviously need to get all the pricing for your positions, and we need to track all the trades and cash disbursements or cash infusion contribution to your portfolio, which we'll get to it later in the presentation. But we are doing that, and therefore you can create multiple asset tracking schemas, all of which will be executed in automated fashion to keep perspective for you, and you can see time over time. Conducting prospective research is something that we consider very valuable, that you would like to do analytics or quantitative research relevant to your tracking schema. You might do this in general on any dimension you like, but ultimately, as you watch your assets being followed and your performance calculations and perhaps deviations are tracked, we think that you'll be more interested in tracking your analytics and your research as what dictates or what changes the market conditions or flows, any even political situation that might affect your decision-making process. We'd like to give you indicators as the user interface might go as to where changes occur from over what historical perspective, and it will probably influence the way you conduct your research. In the total sense of tracking, the research notes you take would be complementary to tracking mechanism you set up yourself, and you can always change your tracking mechanism. As you see that being built in front of you, if you think of a user interface where you can see this, and by the way, you don't necessarily need to be in front of a computer every day for this tracking mechanism to occur. We would be doing this automatically, and you can look at this time over time when you come and look, and you can take a look at what you had seen from the last time you visited a presentational display. That's how we're going to validate strategy models. You obviously can have more than one strategy model. One would be your primary, your investment, and others we would suggest you can keep alternative investment models as a what-if scenario and compare the what-ifs to your actuals, and time over time we think that will be instrumental and helpful to you to decide if you were to make decisions differently, how would those perform, and give you a comparative analysis. And as we do all the tracking, the portfolio performance measurement and strategy attribution is according to your tracking mechanism, according to your aggregates. We calculate accordingly, and you can always answer the question, what have I attributed my returns to? Next slide, please. Technology tools. The tools we've assembled over time, tools we use. We clearly need to have an accounting backend engine for your mechanism for tracking. If you use interactive brokers, for example, we have a technique we developed that takes real-time pricing of the assets you've got. You can do a collection of what-if scenario using pricing model of theirs, and we can do effectively if you think of Excel maybe as your private tool for any user interface and calculations, we have opportunity to bring Excel into more automated mode. And I'm using Excel more of as an example of a user interface that has some functions built in, but any other display or analytics tool might be of value here as well, provided we can integrate with it. Interactive Broker's got a collection of APIs we have used to do that function. The key benefit is that we need to track any changes to your positions on a multi-legged basis as often as those changes occur, either pricing changes or trading changes, and we keep everything together in a historical dimensional view. Essentially, that's the point of a strategy model tracker. Any positions within each aggregate, if we track them, we're going to notice when they fall out of balance, so to say, out of strategy, and notifications would come to you either on the screen that you watch or maybe in a different manner. We do have other minders that can be put in place. And again, we have a benefit here that Interactive Brokers Traders Workstation was allowing us through their API to keep minders on anything we're interested in. And we have a mechanism to expand it and make more custom nature of these trackers. Calculation cycles. The portfolio performance calculation cycles are for us as at least daily, and we're able to do this on an intraday basis. That will be something you, on your preference, can set up when you establish your tracking criteria and your tracking schemas. We are accustomed to doing calculations as often as the change occurs. It depends on the number of assets or positions in your portfolio that's relevant to what we call a system performance. If it's not too many, we can do this on the fly all the time. If a certain larger area is being used, we can do this on the certain parts of the day. In any event, it's something you can choose and configure, and that would be a benefit of what we can put together. If you have a strategy, for example, that might be you build in strategy, something we've done recently is long-short US dollar neutral portfolio balance, and you would choose your securities accordingly. We would have a mechanism to track when your securities fall out of that neutrality, and we tracked it due to pricing. And essentially, it would show up in your correlator schema and say these points are in danger, so to say, or at risk, and you can choose to make the adjustments along the way. And if you do those adjustments, for example, through the tracking mechanism of a tool, we're able to, through Interactive Brokers, place the trade. You originate the trade, it executes through Interactive Brokers, and we can take a perspective of the immediate execution, although the end of day would be where you actually reconcile completely. Next slide, please. Decision support. Arriving at decisions is a key criteria for what we consider to be a value here, at least in what we're trying to build as a value. Tracking schemas establish breakpoints as you define your strategy models, and you in a simplistic sense, can do your assets in a certain class. If the entire class did not perform well, that might be one of your comparative decisions during a key period. The key point, obviously, is that you want duration and you want certain validation points there along the way. We expect that the daily tracking, or again, I'll use the word daily in a sense that you can track as often as the changes occur. And if you have all that series of collective data, we would manage it to a degree that we can answer the question in what period, for how long the fluctuations took place, and you can also use it to weight your conditions and weight what significance you attach to a particular return on a particular time period. And if you do your analysis and research in correlated manner, then you can also answer the question for yourself: is that what was my decision-making process at the time? Why did I make certain choices at the time? And effectively, did it meet my expectations? And here is an interesting point as far as we're concerned. To answer the question, was it right or was it wrong or was it on target, you can also correlate your assets you invested in with what I would consider an alternative asset collection. It does not need to be in your immediate portfolio, but it might be one of the other assets you would consider comparing your primary investment in. It is different from benchmark. Benchmark you would create, by the way, create on your own blended benchmarks, but you also take industry standards. But if you wanted to compare, close enough assets to the one you invested in, the correlation technique would actually be helpful, and to say, were you on target? Could you be differently on target had you invested in those other assets? Portfolio performance measurement calculations methods. We examine returns in multiple formulas or dimensions. Time-weighted return we think is the most useful. I think that most people do use that. We also have built into our criteria discounted cash flow or average capital base. And that would be up to you if you consider those other mechanisms valuable to you based on how you track or would like to track your opportunities. The benefit to us is that we would be able to attribute at a very granular level of your tracking schema. So we always start at position. I go back to the definition of atomic view. And as granular a hierarchy as might be, aggregating sort of from the bottom up at every return interval, you can always determine and see, especially historically, what values you have created on your private and custom investment schema and how attribution fell throughout. When we look at performance, we're also clearly can look at unrealized and even realized gains or losses along the way. How often you look at your numbers would be relevant to your tracking periodicity. And essentially the objective for us would be to try to yield in the information given to you. If you're deviating by how much, and always can ask yourself a question any time deviation occurs, is it worth it for you to pay attention to? Is it to some intermediate or temporary conditions? And that ultimately is the benefit of tracking to your investment objectives. We're trying to answer this question as granular as we can by keeping data collection historically. Next slide, please. Flexibility in services. This is more to the way we see the world and the way we hopefully want to put together a value to working with people here. Primary objective is really to achieve a level of detail. And the detail we attach to the word tracking, tracking and monitoring your assets at the level preferred by you. This is your setup. This is your private proprietary vehicle. And essentially, the objective for us is that you can capture your strategies in a model and asset allocation and subdivision of assets, and perhaps you might even have strategy within a strategy. But all of these would be translating into a level position holding and valuation, and as often as it changes, and we attach a meaning to weight and contribution of a particular asset or a particular leg of a position to your total return. And you can take a variety of standard measures on how you interpret the returns on a risk-adjusted basis or not. Essentially, the benefit is the value add in what-if scenario. So if we set up, let's say through Interactive Brokers, that's what we do most often, watch lists, and that watch list is translating into a tracking schema that we discussed earlier. Throughout the day, as the prices change, and at some point, if you watch it day over day, you might determine that a certain trade might be a necessary trade to change your strategy. You might change assets in your asset allocation pool. You might get out of an asset class altogether, but you wouldn't make rational, probably rash decisions. Hopefully, you'll do this over a period of time. So effectively, we can react as soon as you make such a decision. Before any end-of-day collection occurs. What we do is keep it in what we determine to be a staging area. A staging area is practically a real set of numbers that reflect from your executions, but they're not cleared yet at the end of the day. We would keep it as an intermediate storage, and we keep it as an intermediate set of calculations. You can always see the adjustments. At the end of the day, we apply the trade files and cash files that we would receive from Interactive Brokers to do the final placement, in final reconciliation of your positions. Same criteria on the intraday adjustment basis. We would update your AUMs, position flows, and aggregates. And AUMs here follow the logic of inclusion-exclusion. You can determine on the aggregate basis whether you include, by definition, everything is included. You can exclude certain criteria, certain assets from your AUM based on how you determine that to be. Benefit here might be for the way you calculate fees, and this is important that you have opportunity to create your own custom fee models off of AUMs, and there's a definition of that on the inclusion-exclusion basis. When we compare actually position flows, we keep position flows for assets in your portfolio and assets in the index or benchmark, and effectively you can, by the way, benchmarks for us are blended. You could create your own blended composite benchmark. We would track it accordingly. And we, at the same logical sense, use the notion of compliance rules. I use the word rules really to indicate that this is a collection of tracking conditions that run through our automated process. And in the compliance sense, you could have a case where you construct individual compliance reports in regulatory sense. And this is one of the benefits we would like to expand time over time as regulatory reporting comes out. By having very low-level capability on the data, we can always reposition and rebuild any view on how your activities have taken place and construct reports at the nature that is required today. You can also do compliance rules at the watch level, including doing pre-trade or post-trade compliance. If you have certain circuit breakers you're willing to set up that way, the flexibility from our techniques exists in that consideration. Next slide, please. Performance attribution. I mentioned earlier that time-weighted returns is what we do most often. I guess people prefer that more often than others, but the other two methods in our list is the DCF and ACV are also available. Any of the methods you might use, we calculate on the position basis on the daily level. And again, if your frequency of preferred checking is more often, we can do this as often as frequently as the position changes. We keep a pre-calculated base of numbers for position flows per position, so this is more of an expediency of getting to the end result for an aggregate. Aggregate for us in this case we define as a group by, which is group by assets. You can group by collection of by industry, by asset class, by other dimensions you set up during the system establishment. We aggregate from the position to the level of aggregate to the level of aggregate above that. So if you have hierarchies, we will roll one into the other, and we will recalculate at any level of hierarchy when that recalculation is warranted. Depends on the change. Okay. Time periods, traditionally inception to date, current month to date, quarter to date. You can define your own time periods. As the calendar moves, we shift position flows and we shift the calculation base. Let's say if it's a relative 1 month, it shifts by 1 day every day, and to that degree thereafter. The performance that we feel is important is to be able to adjust performance historically when your alternative models, and what we call alternative model is your other what-if scenario that you can run in parallel with your primary model. So primary would be your actual investment, and alternatives you can set up as a what-if. And Interactive Brokers allows us to set up watch lists again and track. We can have more than one alternative model. Running and calculating in parallel as if it were your primary investment. And we find benefit in that to sort of compare and contrast. And you can check your own logic, what decisions you've made again over time. On the primary model, on the investment model, we apply, since we're doing performance performance calculation and portfolio accounting engine in the background of this whole schema, any as-of transactions, any assets being taken out as of a certain date, repositioning of assets from the current date forward, those adjustments are made, again, as often as that occurs, or possibly end of day. That's also a preference you would set up, depends on the size of your portfolio, and we would go from there on. The imaginary trade, so again, if you're following the alternative models and you would like at some point to say, even in my alternative model, what if I did this change or the other change, you could execute through Interactive Brokers platform an imaginary trade, so to say. It's an actual execution with a real price, except it doesn't go to market, and you can do your more elaborate what-if scenario. And that's one of the benefits we try to do for our own research, and we feel that's certainly a benefit that the platform allows us to do that what-if comparison. The next slide, please. Interactive Brokers technology design. This is a simplistic view of how we integrated some of our tool sets with Interactive Brokers. We essentially realized that you're going to be, hopefully, a customer to Interactive Brokers using the Trader's Workstation. So we integrated some of these tracking tools through the Trader's Workstation. There are other possibilities of the other APIs that they provide. But in this case, let's say I made earlier mentioning of long-short US dollar neutral portfolio strategy. We integrated directly through Trader's Workstation using Excel and using the ActiveX API that they offer. It's convenient for demonstration. It's convenient for you to see that your Excel, I guess most people use it more often, particularly if you do this in the manual manner. If you get your trades someplace else, but you account for them in your Excel and you maintain your end-of-day collections and calculate performance that way, Excel can come alive in that sense and be your front-end tool, essentially fronting the Trader's Workstation. You can see from a demo case that anything you put into Excel actually gets worked through the Trader's Workstation, and price change we basically request of the Trader's Workstation. Any action we can support, any action we can do. And you can, by definition, place the trades through Excel window, and it gets executed through the platform. We get confirmation. You get a full capability that you get through Trader's Workstation. Again, the flexibility of their API allows us to do that. And that essentially brings me to the end. I want to mention one more thing that I skipped a little earlier. The mechanism that we try to apply here that actually makes it effective and not manual is that we use in the background technology for what market calls complex event processing. It's the conceptual schema that says for any analytic event, you can introduce, for any analytic event you call analytic event, you can introduce a mechanism to watch that event in occurrence. And any change to that event, perpetual over time, would be picked up, collected, recorded, and a correlated set of actions, which is what you do when that information changes, would be placed into our system. And that could be a simple revalue position, that could be as your value position aggregate into a return, and down the line. And we often do our own sort of prospective reasoning by saying what research can we support, what news information, what other feeds, what other pricing, what can we look at around the market data sources to support as our decisions unravel before us. And as we automate that, they become additional action in this long string of respond or react to an event. Eventually, you'd be able to look earlier than an event occurs and say, historically, this is what we've seen happening. Can we watch for an earlier occurrence of such a thing? And that is the conclusion of us.
Wonderful. Thank you, Henry. We just want to thank you so much for your time and sharing your expertise and guidance with the hedge fund community today. As our fund managers obviously get their funds up and running while trying to manage costs and all of the different reporting requirements that they need to provide both to investors as well as to potential investors. I just want to mention at the end of the Starpoint presentation, they do highlight the different services that they provide. There's also a phone number which you're welcome to call. I wanted to mention, more importantly, as far as being able to set up any demos, they have some samples of things that they've done with the Interactive Brokers API. I've seen some of them, particularly with a long-short equity fund, and they have other samples that they've been using. So you're welcome to contact Henry and Victoria Slutskaya directly to set up a private demo to learn some more about their services. I just want to take some questions from the audience today. We did have several questions. Henry, one of the things that the audience had asked is if you're willing to go on site with the fund managers and would be willing to sign an NDA to kind of give them an overview of what they currently have, their workflow, some of the basic reporting they'll need in a phase 1, and then what they'll need in a phase 2 in terms of attribution reporting and investor reporting. Are those some of the services that you and Starpoint do for hedge fund managers?
Yes, those are the services we can offer. We basically would come out and speak with you and take a look at how you track or how you would like to make notations of your following of your assets, and we would make recommendations, possibly for setting up a recommendation how to collect more data in more detail, in more instrumental matter, and also from the integration perspective, depends where your data comes from. And then follow this logic that I tried to explain today is making suggestions and recommendations, what automation can be offered for you and what calculations may be added in addition to what you do today.
Great. And oh, go ahead, sorry. I'm
sorry, yeah.
Including?
Including reporting, including consequences of tracking data that result in reports maybe for you, for the manager privately, and also for any regulatory reports that would come out from that collection of data.
Great, and understanding the sensitive nature of some of your specific strategies, we won't be addressing them directly. But as far as being able to sign a non-disclosure, and obviously the proprietary nature of your strategies, Henry, is an NDA with Starpoint something that you guys entertain frequently in your projects? Non-disclosure agreement.
Yes, we do sign. We can have a standard template. We can send it out. If anybody would like to speak to us further, it's our standard practice. We are, in that sense, a consulting organization in addition to offering techniques and tools and services that we described today. We would sign it first and then take a look at your situation.
The other thing that's come up in the last year is the importance of cost-based reporting, both on the equity front and starting to come into play on the option front. To what extent can you help our fund managers keep track of their cost basis for investors?
The cost basis mechanism is actually part of our portfolio accounting engine. As we apply transactions, we actually do lot level accounting, and we maintain various forms of cost basis rules that you can use. Essentially, it's a cost basis rule you would choose when your portfolio engine is set up to do your back-end accounting. And out of that comes up, as your buys and sells occur, essentially, we will maintain that information on the cost basis level and account for that accordingly using the cost basis you selected. And we support FIFO, LIFO, or average cost basis rule. And from that point on, we can go into using that data to construct your cost basis reporting.
Terrific. And just lastly, the audience had mentioned the importance of keeping pricing data. If they have issues in terms of collecting pricing data for options and option spreads and so forth, are you willing to sit down with the fund manager and help them to incorporate that within an API?
Yes, absolutely. It's a critical path of what we're trying to say. Again, our value would here be to be able to obtain the important data to get as granular level of tracking for your fluctuations and changes, using the word change in perpetuity. So pricing would occur, we would most definitely need pricing on a real-time basis, and in terms of our techniques, we would incorporate pricing that is appropriate for you into the engine. Price feeds are basically configured and individually taken. We do maintain a equivalent of a product master, security master that we would use to correlate your trades and your positions. And that's something that we will discuss with you up front to see what is the nomenclature and what is the transaction types for postings. So when the reporting comes out and calculations are attributed to your aggregates, you would know what they named.
As far as cost vectors, you can certainly reach out to Starpoint directly on those issues, and Henry can explain that offline. I just want to spend the next 5 minutes just briefly discussing Interactive Broker strength and security, some of the new programs that we're offering here to IB-cleared hedge funds, a few comments regarding IB's account management and reporting capabilities, and just reference a couple of the account types that we offer specifically for hedge fund managers. Just want to mention Interactive Brokers has over $4.6 billion in shareholders' equity. We have no subprime risk. We've accepted no government TARP funds. We've executed over 1 million trades per day. The firm currently has over 178,000 clients worldwide. Interactive Brokers credit rating is currently A-, A-2, outlook stable by Standard & Poor's, which was recently reconfirmed. We offer market access to over 100 different market centers. More importantly, we have a margin system which continuously enforces trading limits. To open up a hedge fund account, you'd simply go to www.interactivebrokers.com. You'd click on the institutional button. We have several different account types that we offer, and simply you could begin the account opening process. I just want to mention the first account type that we offer, which is a single pooled hedge fund structure with a single manager. Pretty straightforward. But the more popular account type at Interactive Brokers that we frequently mention is the master feeder structure, or the multiple fund account type. This particular account type allows the fund manager to run multiple sub-funds under the same investment manager. It's also helpful if you are looking to establish an offshore vehicle down the road. More importantly, don't think that you won't want to establish an offshore vehicle down the road. As you take in more assets, it comes up quite frequently. Each fund account type is owned by a separate legal entity and is credit managed separately. We offer both pre- and post-trade allocation, which can be utilized by the fund manager. The system at Interactive Brokers is very transparent. We offer multiple views which are available with the fund manager controlling both the trading and back office access. Lastly, just want to mention some of the new programs that we offer to our new IB hedge funds. We've recently launched the IB Stock Yield Enhancement Program. This is a new program that allows the fund manager the ability to loan out and earn interest on the portfolio's fully paid for securities, with the buy-in risk being managed by IB Stock Loan Desk in a split arrangement. Additionally, we have the traditional stock loan borrow capability. This is available on the trader workstation, and this is where the fund manager can simply manage the buy-in risk himself and loan out the portfolio of securities, obviously with you managing the risk on your own. We just recently launched last year our Hedge Fund Capital Introduction Program. This service is available for IB's cleared hedge funds who've demonstrated a 1-year solid track record of performance and have secured both an independent accountant and fund administrator. It allows the fund manager to post their offering memorandum and audited returns to be viewed by IB's accredited investors that have signed up for the program. We also offer soft dollar program for those eligible hedge funds which are 28E compliant. Additionally, we have 24-hour prime brokerage service. Some of the new reporting tools that we've launched at the firm, as Henry had alluded to through Starpoint, we've recently launched Attribution reporting. This allows the fund manager to monitor by sector the strength of certain portfolio holdings. This is located within the Portfolio Analyst feature within Account Management, and we highly encourage you to take a look. We've also recently launched Tax Optimizer. This is a wonderful tool for you to sort of explore before, on a pre-trade basis, the tax consequence of any given trade prior to execution. Mr. Zelikovsky also mentioned Risk Navigator. This is a full risk performance tool that enables the fund manager to monitor both the risk and portfolio performance by asset class. Again, you can also do what-if scenarios within the Risk Navigator. I just want to mention, since the firm's inception, the front-end platform is called Trader Workstation. It allows for the client to access and trade over 100 different market centers. And again, this is our flagship product for which we're very proud. Additionally, the universal account concept allows the fund manager the ability to settle in any currency. I've listed some key links that you guys can simply copy-paste to your browser to help you better navigate the IB website. We just want to thank you so much for attending the Spring Hedge Fund series. This is something that we've been wanting to do to be an advocate for you as you grow and launch your fund. We want to thank you for learning more about Starpoint, and more importantly, we want to thank you for considering Interactive Brokers as your prime broker of choice. Have a great day, and thank you so much for attending.
Thank you.
Just want to mention that we're conducting a brief poll, so there's a couple of questions we want to encourage you to answer at the end. And again, any suggestions or ideas about upcoming webinars, I suspect we'll be doing a fall series as well. Please feel free to email me directly. And again, stay in contact with us as you grow your fund, because your success is our success. Thank you so much, and thank you for answering the poll, and have a great day.